Good morning, good afternoon, favorite traders from across the globe. Welcome to Short-Term Trading Live with Oscar. All right, traders, listen, we're back. This video is for Tuesday, Jan 20th, 2009. Listen, I know some of you and many of you out there are talking about the Obama rally. Traders, let's start off with this. Big job cuts are coming our way. They're happening now, and they're still coming forward. Circuit City, 30,000 plus jobs. 567 stores done, need to be liquidated. Hertz, the car rental, 4,000 jobs cut this week. AMD, the chip maker, 1,000 jobs, make that 1,100 jobs actually. Pfizer, 2,400 jobs. General Electric, 11,000 jobs. ConocoPhillips, a huge oil company, 4% of its workforce out the window. Schlumberger, everybody knows Schlumberger, right? The biggest oil company out there. They're cutting at least 1,000 jobs. Traders, you got manufacturing output, the lowest level in 33 years since 1975. CPI comes out the lowest. Consumer Price Index is the lowest since 1955. It was 0.1% last year as opposed, or I should say 0.1% this year as opposed to the same month last year, which was 5.6%. That is a huge drop in CPI. Everybody, well, imagine this. Check this out. Everyone's talking today in my room about the euro possibly, or the eurozone, being the first international or world market to come out of trouble. Traders, I don't think so. Europe's got a lot of interest rates to cut. The United States is done cutting rates. Europe's got to catch up. If they're lowering rates, their stock market is not going up, and their currency is not going to go up. Eurozone has its first trade deficit, and listen to the figures. In October, there was a $663 million surplus in Eurozone's trade deficit, or in Eurozone's trade. So they had a surplus. They went from a $663 million surplus to a $9.3 billion deficit in a month. In a month. They went from October being $663 million plus to $9.3 billion in the red in a month. Traders, that is bad news. Now, listen to this. One more piece of news, then we'll look at some charts here. Foreigners investing in the United States bought $56.8 billion in U.S. Treasuries in October. How much do you think they bought in November? Anyone want to guess? We went from $56.8 billion purchased in October. Anyone want to guess what they purchased in November?
I guess none.
None. Anybody? They purchased, well, here, let me do it another way, make the numbers sound better to you. In October, they bought $260.6 billion worth. In November, they only bought $56 billion worth. That is $203.8 billion less invested in this country from Europe. If you think the stock market's ready to go up because we're getting a new president, traders, there is no way that's the case. I am here to tell you right now, don't fall in love with the upside. If we get some kind of crazy Obama rally, it is basically going to be based on emotions. There is no way he can do anything right now that's going to stem the tide, traders. So let's keep that in mind right off the bat before we look at analysis. Don't fall in love with the upside. Yes, we're all Obama fans, right? Whether you voted for him or not, now that he's the president of the United States, you have no choice but to stand behind this guy and back what he says. Whether you agree with it or not, whether you like it or not, that does not matter because he's the guy right now. He's in charge, right? So, best thing you can do is line up behind him and hope it works. I'm there, I hope it works, but I got eyes and I can understand things that I see, and what I see tells me more downside coming, traders. Now that brings me to the S&P for tomorrow's trading. The March S&P, we have a red army, baby. We're looking for some more downside. I've seen the indicators. I know some of you analysts out there are probably telling me that the indicators are pointing up. I'm here to say that most times in a condition where indicators are pointing in one direction, but you have a formation on your chart pointing in another, the formation takes precedent over the indicators. And we have been in a parallel channel formation in the S&P for quite some time. Now, I want to talk to you about parallel channels. I'm going to show you a couple of them on these charts in about a moment. I'd like for you to look at them, see how they've worked so far, pull up your own charts and see if you don't agree with me here. I think you will. Parallel channels work well, traders. Let's go to the charts and we'll talk about it. Okay, traders, what you're looking at is the March S&P daily bar chart. As you can see, the S&P still continues to respect the top line of the parallel channel. Hits the top, goes to the bottom, hits the top, and then decides to head back for the bottom. Seems to happen time after time. As long as the market is respecting that channel, I will be selling into the top of that channel. Now, traders, if you recall, we had this whole lesson all last week and the week before that we were stuck inside of this ascending wedge, and we talked about it getting a little above the wedge and then breaking down. It has broken down into a parallel channel, and it looks like we are going to head for the lower end of that parallel channel. Somewhere around 800, 802, somewhere in there is what the projection is based off of what I've seen looking at analysis right up to Monday evening, which would be the 19th of Jan. So analysis up to the 19th of Jan for trading on the 20th for Tuesday tells us look for more downside. Interestingly enough, traders, on the holiday, Martin Luther King Day here in the United States, we had a 3-day weekend. The market rallies right up and just kisses the top of that line. That was up around 865. The market is now trading in the 830s. It has dropped $30 since hitting that high. These parallel channels work really, really well. Let's look at another one, traders. Okay, traders, the next chart you're looking at now is the NASDAQ March daily bar chart, right? Two things going on here. You had this same ascending wedge, and you can see I have it marked in yellow. I'm just going to darken it in, just like you've seen in the S&P. But in the NASDAQ, there's a slightly larger one growing here, traders. Look at this bottom of it, the bottom of this wedge right here. And you know we like to trade when you come out of the wedges, right? The bottom of the wedge was broken two trading days ago, traded up to it and stopped cold here on Sunday evening, and now looks like it wants to move lower. So not only do we have the parallel channels the S&P is dropping down in, but you are now coming out of this wedge formation and heading down in the NASDAQ. That I find interesting, but let's stay with parallels a little bit longer here, traders. Let's go back into another chart that should clearly illustrate how well parallel channels can work for you. Okay, traders, what you're now looking at is the Euro currency March 09 contract. And look at this. Talk about a parallel channel working well. You have the parallel channel here clearly defined in blue, right? The only time you got through it was down here. You had a little dot through it. It ran right back up. As you can see, top of the channel, bottom of the channel, just about the top of the channel, hits the bottom, hits the bottom, hits the top, then hits the bottom. Well, guess what it did on Martin Luther King Day today? The U.S. was closed, but the Euro currency was open. Can anyone tell me what they think happened here? We hit the top of the channel. Out of nowhere, the market rallies. It hits the top of the channel at 133, and it breaks all the way down to 129.65, traders. That's 342-point plunge after hitting the top of that parallel channel. These channels work really, really well. For you traders that are thinking that Euro currency is bullish, you see the channel it's in right now? You see what's happening there? Well, let's go take a look now at the opposite of Euro currency, which would be dollar index, and see what that channel looks like. Okay, traders, final chart for the evening. This is dollar index March 09 contract on the daily bar. As you can see clearly, this market is respecting its parallel channel. It bounced off the top, it bounced off the bottom, it bounced off the top, it bounced off the bottom, it went near the top, came back down, just about hit the bottom. That was on Martin Luther King Day of all days. What do you think it did since then? It exploded, and now it's up here, and that would be above major resistance. If you draw in this trend line, which hits this high, and the last three highs, major resistance coming to the top of the channel. You're above it right now in the aftermarket or the evening session on Monday evening for Tuesday. So these channels are really working well. This is dollar index, and it's clearly bullish. You saw Euro currency clearly bearish, but staying inside the channels are what's most important here. That's today's lesson. Pull up these channels for yourselves, traders. Make sure you see where you should be buying, where you would take your profits, where you would buy once again, and see if these channels are working for you. They do work well, traders. That's why I presented them to you in this video. So, traders, you see those charts? Look, traders, I will point it out again. Parallel channels, they work really, really well if you trade them properly. Now, I'm going to point out a way that you should be trading a parallel channel if in a bear market, traders. If you are in a bear market, the market hits up here on a parallel channel, let's say it trades up, and you go short up here. When it gets down to here, you do not buy long, traders. You take profit. That's the thing that people get wrong here all the time. When it gets to the bottom of the channel, you take profit. You don't get long anticipating the top of the channel again. It may never get there. It may blast right through the bottom and continue on down. So, you don't try to outsmart the market and think, oh, I could sell it and then I could buy it and sell it again. Traders, the market's always right. Us humans get it wrong. So if you think you can outsmart the market that many times, I'm here to say you can't. But again, if you do this correctly and you see a parallel channel, the market is bearish, you sell it up here, you get out down here, you wait for it to get back up here and sell it again. When it comes back down, you simply take profit. You do not get caught long in a bear market. That's the way I handle parallel channels. In a bear market, I try not to buy into it because, let's face it, you're in a bear market. So you sell those rallies at the top of the channels. When it comes down, you buy them back. You sit on your hands. You wait for it to either get back to the top of the channel, or you find out if you're now going into a totally new formation. And as you know, we're day traders, and these charts morph into something different all the time. You have an ascending wedge, which morphed into that nice parallel channel, which could morph into a head and shoulders. You don't know what's coming next. So as day traders, you trade what's given to you and not what you anticipate. And with that in mind, traders, once again, for Tuesday, 01/2009, Omni says to sell the S&P in the mid to low or low to mid 850s. If we get above the 848 mark, somewhere in the 850s, you sell into that. Place your stops in a, as I say in every video, traders, always use stops, always place them first. Put your stop in a sensible place that your wallet can both live with and the market can travel to without taking you out. Stops can be difficult. Placing stops I know can be difficult. If you'd like to figure out how to get those stops placed properly and where to put them, simply come on down to www.livewithoscar.com. Grab yourselves a free membership, jump in the chat rooms, and allow me to teach you how to come up with the proper analysis, where to place the stops, how to read these channels, how to work through the channels, and then the proper mentality to execute your trading plan. There are a lot of pieces in being a good trader. You got to have the proper mentality. You have to come up with a trading plan. You have to know how to stick to that plan. You need to know the mechanics of placing the orders, typically simply typing them. You know, there's a lot that you need to know. I know it can be a bit intimidating, but with us here, we will help you get through those tough days, and we will help you get past your learning curve. Make sure you come on down to the site. All right, traders, so we're going to sell the low to mid 850s. Profit objective, are you ready on this? 805 to 802 on the downside. On the way down, we expect support around 825 and again around 812. So if you get lucky and you can sell it in the 850s, around 825, 823, we expect support. Again around 812, on its way down to 802. So I say Obama or not, I don't care. I'm trading the technicals as I always do, as I teach all of you Omniacs to do. You trade technical analysis and let the fundamentals come out in the charts. As I always tell you, fundamentals come out in the charts first. So no matter what Obama's going to do, we will see it in our graphs before it gets there. So do your day trading, do your analysis every night, and don't worry about the politics. That'll all work itself out. All right, traders, as I tell you, never trade alone. There is an army of us Omniacs building. They hang out in my site every day. They're in my chat rooms. I am live on audio and video as much as humanly possible, guiding you traders through these rough and tumble markets. And let me tell you something, from the feedback I've been getting, and what a round of applause does the Omni need on this one, baby. Let me tell you something, traders. There are a lot of managers out there that are choking right now. They can't figure out what to do. And we have helped literally thousands of you Omniacs make it through this down move without losing your shirts. We've told you and helped you figure out it's a down move or a bear market. And we've shown you how to get in and how to get out so that in most cases your account goes up and not down. I know there aren't many managers like that left on the planet, so if you need that help, you make sure you come on down to our site, traders. We'll take good care of you. All right, guys, trading contest. I see the look on your face. Traders, make sure you sign up for the trading contest this week. Very simple. Come to the site, click on join the trading contest. You will get your simulator this week. Practice with your simulator all week. Next week, what we'll do for you is, of course, start the contest, and then you'll be able to trade. Cash prizes are issued, and you're trading in a simulator, so none of your own cash is ever at risk during the contest. Good, guys? Good. All right, so if you get a chance, make sure you join the contest. If not, come on down to the chat rooms. And remember, Red Army again for tomorrow, baby. So don't forget, we're selling the rallies. All right, traders, give me a buzz anytime day or night, 702-629-4755. And remember, say this to yourselves every morning, every afternoon, every evening. It'll help you keep your emotions out of trading, and you know what that is. Stop soaring! Emotions are out! Yeah, what a crowd. Yeah, I like that. Bravo.
Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided. That being said, I am a 24-year seasoned trader on and off the floors. This is how I've made my living for many, many years. Good luck trading.